Be Wealthy and Smart, episode 878.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about inflation on the rise, because recently the numbers for inflation came back, and some of these numbers are the highest we've seen in 20 or even 30 years. So this is very serious. It's something we need to talk about because it affects you, your life, the stock market, everything. So we're going to talk about that today, and I'm going to share with you an article that comes to us from Reuters. And it says, U.S. consumer prices increased by the most in nearly 12 years in April as booming demand amid a reopening economy pushed against supply constraints, which could add fuel to financial market fears of a lengthy period of higher inflation. The report from the Labor Department on Wednesday also showed a strong buildup of underlying price pressures, extending a stock sell-off on Wall Street. Most economists were, however, unwavering in their belief that the surge in prices would be temporary, noting that the main drivers of the bigger-than-expected inflation increase were hotels and airlines, industries that were hardest hit by the coronavirus pandemic. Bottlenecks in the supply chain, which led to a record jump in prices of used cars and trucks last month, were expected to ease. Federal Reserve Chair Jerome Powell has similar views. This is not a sign of an inflation problem, said Robert Barbera, director of Johns Hopkins University Center for Financial Economics. We have the capacity to produce this stuff. We simply need time to get things back online. The Consumer Price Index jumped 0.8% last month, the largest gain since June 2009. The CPI rose 0.6% in March. A 10% surge in prices of used cars and trucks, the most since the series started in 1953, accounted for over a third of the increase in the CPI last month. That followed a 0.5% rise in March. Motor vehicle production has been hampered by a global semiconductor chip shortage, boosting demand for used automobiles. Food prices increased 0.4%, lifted by rises in the cost of fruits and vegetables, dairy products, meats, fish, and eggs. Households also paid more to dine out. But gasoline prices fell 1.4% after accelerating 9.1% in March. A sharp rebound is likely after hackers shut down the Colonial Pipeline on Friday, leaving gas stations from Florida to Virginia running dry and prices at the pump surging this week. Economists polled by Reuters had forecast the CPI would climb 0.2%. In the 12 months through April, the CPI shot up 4.2%. That was the largest gain since September 2008 and followed a 2.6% increase in March. The jump mostly reflected the dropping of last spring's weak readings from the calculation. Those so-called base effects are expected to push annual inflation even higher in the months ahead. Stocks on Wall Street fell, building on the previous session's losses, as investors worried that surging inflation could force the Fed to raise interest rates sooner than expected. The dollar strengthened against a basket of currencies. U.S. Treasury prices were lower. At the very least, this report demands extra work from the Fed to assuage markets in its standing its ground, and why, said Chris Lowe, chief economist at FHN Financial in New York. The U.S. Central Bank slashed its benchmark overnight interest rate to near zero last year and is pumping money into the economy through monthly bond purchases. It has signaled it could tolerate higher inflation for some time to offset years in which inflation was lodged below its 2% target, a flexible average. Fed Vice Chair Richard Clarida said on Wednesday it would be some time before the economy is healed enough for the central bank to consider scaling back its support. The Fed's preferred inflation measure, the core personal consumption expenditures price index, is at 1.8%. Demand is being driven by nearly $6 trillion in government relief since the COVID-19 pandemic started in the U.S. in March 2020 and the vaccination of more than a third of the population. There are concerns inflation could linger amid reports that companies are raising wages as they compete for scarce workers. Though job openings are at a record 8.1 million and nearly 10 million people are officially unemployed, companies are scrambling for labor. Generous unemployment benefits, fears of contracting the virus, parents still at home caring for children, and pandemic-related retirements have been blamed for the disconnect. Average hourly earnings jumped in April. Economists are keeping an eye on fairly high inflation expectations, which some say could become a self-fulfilling prophecy. Excluding the volatile food and energy components, the CPI soared 0.9% last month, the largest gain since April 1982. The so-called core CPI rose 0.3% in March. It was boosted by a 10.2% surge in prices of airline tickets, as well as an 8.8% jump in the cost of rooms in hotels and motels. The cost of renting a car soared 16.2%. Rental companies offloaded their fleets at the height of the pandemic, and the semiconductor shortage is making it harder to restock. Further increases are likely as these tourism categories remain below their pre-pandemic levels. Prices for new motor vehicles increased 0.5%. Consumers also paid for more recreation, motor vehicle insurance, and household furnishings, but healthcare costs edged up 0.1% for a second straight month. In the 12 months through April, the core CPI jumped 3%, also boosted by base effects. This was the biggest increase since January 1996 and followed a 1.6% advance in March. Put together with potentially higher wage inflation, higher inflation may be stickier than the Fed expects, said David Kelly, Chief Global Strategist at JP Morgan Asset Management in New York. End of article. So with inflation numbers up, it's not only hotels and motels and cars, but of course we've seen a huge increase in real estate this year. Real estate prices running about an 18% increase over the last year. And we definitely are noticing food at the store being more expensive, or manufacturers packaging it in smaller containers so that we're paying the same amount for less and smaller sizes. That I've seen a lot as well. But overall, what's happening is inflation is making your money worth less. So for example, the milk that's $2 today could be $3 pretty soon. And that means your money is losing value as inflation goes up. Money sitting in a savings account is losing about 3 to 4% a year at a minimum. So you really need to think about what are your strategies to not lose your purchasing power. My favorites are physical silver, physical gold, and certain cryptocurrencies. This is because trillions of dollars are being created and have been created in the last few years. And again, they're talking about another $4 trillion stimulus package, I hear. So the US dollar is essentially being debased. Debasement means the lowering of the value of a currency. And that word comes from ancient times when the rulers used to take pure silver and gold coins and they would put less precious metals in them, base metals, if you will, to debase the currency. And that way creating the money cost them less. And it was a way to water down the value of the currency, if you will. But they tried not to let the people know they were doing that. Now the term debasement just means the dollar is losing purchasing power. And it's been going on for a long time. Since 1933, the US dollar has lost 92% of its purchasing power. That's why houses used to be very inexpensive in the 1950s, and they're a lot more expensive today. Well, it's actually that the dollar has lost its purchasing power. It looks like housing prices are going up, and they are, but what is actually happening is our currency is buying less and less and less each year. So the way to get around that is to have your money in physical assets and commodities such as oil, farmland, real estate, physical gold, physical silver, and cryptocurrencies. You want to be thinking about what your strategy is to protect your family's purchasing power because this problem doesn't seem to be going away anytime soon. even though they say it's temporary, and it could be, because sometimes these debasements can result in inflationary prices and then result in a deflationary collapse of prices. That may happen. So it may be temporary, but if the market thinks that inflation is back, it will automatically start to raise interest rates. And rising interest rates is only going to slow down the economy, slow down the housing market, and that's not a good thing. So there are mechanisms that start to work automatically when inflation numbers rise, and that's what we're probably going to be seeing. So the Fed doesn't have to raise interest rates for interest rates to start to go up on their own. That will naturally happen in a rising inflation environment. So we'll keep an eye on this, we'll keep reporting to you, and think about your strategy to protect your money's purchasing power. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And we have our review contest going where you can win the Wealth Heiress book, which was named to the list of all-time best wealth books by Book Authority. Or you could win my Wealthy Mindset Blueprint audio sets valued at $197 or a one-on-one session with me. All you need to do is leave a podcast review for Be Wealthy and Smart on Apple Podcasts, and that will get your name in the drawing one time. And if you've read the Wealth Heiress book and leave a book review on Amazon, that will get your name in the drawing 2 times, and winners will be announced on June 1st. And thank you to everyone who has left a review. I so appreciate it. I'm very grateful for you taking your time to share your thoughts with me, and I love reading what you have to say. Thank you so much. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.